chat this year. Hello, everybody, and welcome to the Gold Rush. I am Sam Gatlin, an editor at All-Star Charts Gold Rush, joined by my better half, Mr. Jason Perz, who works with me at All-Star Charts Gold Rush, and together we make one of the best teams in the world for covering not only precious metals, but we cover it all, Jason. The bonds, the currencies, the cocoa and the coffee. We cover everything, fixed income, commodities, and currencies. And I think we do it as good as anybody out there, Jason. So everybody that showed up to the stream today, you came to the right place and you are in for a treat today because, man, what a move we are seeing in precious metals, Jason. Everybody's talking about it. And man, it's not stopping. So we have lots of charts to discuss today, but I think the best way to start the show, Jason, is with slide number 2, my man Jingo Tay, if you will. So this is a great tweet that you brought along today, Jason. This what's this guy's name? Is this the one that ran across all of, was it Africa, Middle East?
I mean, it's David Goggins. David Goggins is
Yes.
the guy who has all those videos, and he used to be in the military, and he has all the videos of him talking about working out and being a badass and never stopping. I think he holds the world chin up record, a bunch of different records he has. But the dude's just an animal, and even he was a big guy who had gained a bunch of weight in his early 20s. And he decided he wanted to be completely different, change his entire life around. But now he preaches a lot of motivational stuff. So it's just funny because it's just the gold rally just keeps going and everybody thinks it's going to stop and it has to stop. And at some point, this thing's going to crash. And when it crashes, you want to run away from gold and everything. It's going to happen sometime soon. And gold just keeps shrugging it off and just laughing as it continues in this massive uptrend that just isn't stopping. And really, the thing that you want to think about as a trader is our goal is to catch these type of trades. This is how you outperform. You find these rallies that are the outlier trades. If you really look at trading, how you make all of your money is in outlier trades, meaning those trades that only happen once in a while, where you gain a massive amount of money very quickly, or a massive amount of money over a long period of time in some crazy uptrend that doesn't usually happen. Cocoa a couple years ago would be an outlier. Something like Bitcoin in 2015 to 2017, that's an outlier. These 20x trades, those are the outliers. And now it's happening in the gold space. And yeah, gold's gone up a lot for itself, but look at the miners. I mean, the miners are what is GDX eclipsing 150 now? I mean, it's just it's wild to see that thing compound and just continue to move higher. I don't know what else to say about it besides laugh because I wouldn't have thought in a million years we'd be looking at 150% in the gold mining space in an ETF. This happens, but this is a crazy event that is happening, and we're riding these trends. We're making money. As somebody said in the chat earlier, Sam and I might be gone counting our gains. We're actually not. Sam's old. He's kind of has trouble with technology. I try to school him, me being on the younger side. But so I got him on here and now we can talk about it. But he was just trying to count his gains. And he just couldn't figure it out because the technology was too hard. But for real, though, a lot of money's being made. We're having a great time here. We love that you guys joining us every week. And hopefully this keeps going. And if it doesn't and we start to see some warning signs, we'll happily tell you.
Totally, Jason. And you mentioned big moves in the miners, and Monday's precious metals note that we published for the All-Star Charts Gold Rush Premium members. We covered a stock that's up 10,000% since last year. 10,000%. in a little over a year. I mean, you're seeing extraordinary moves. You mentioned like 150% in the GDX, but that's just at an index level. There's much, much bigger moves happening under the surface. And you talk about gold being stretched. Man, a lot of people are talking about that, Jason. It's not just us that are seeing the overbought readings. Like everybody has the data. This is publicly available data. Everybody can see that the monthly RSI is at the highest level ever. The weekly RSI, one of the highest readings ever. The daily RSI, one of the highest readings ever. It doesn't matter what time frame you're looking at. Gold is extremely overbought, but that doesn't mean it needs to stop going up. You mentioned this is a right tail event. Like this, it can go as far as it wants. Like this cycle, I think gold is going to $8,000. Doesn't mean gold needs to go there in a straight line, though. It can correct significantly. You saw that during the 2001 to 2011 precious metals secular uptrend during the great financial crisis. Gold got absolutely crushed with everything else. So it's not going to be immune to sellers during the secular bull market towards $8,000, but man, as long as the price keeps making new all-time highs, I mean, how in the world could you get off this ride? I mean, you need to wait for some type of signal to take profits. A lot of people want to get short. This is not something I want to short. I want to short something that's weak, like crude oil. Potentially could be a good short here. I doubt it, but like that's the kind of thing you short. Not an uptrend like this in gold.
Yes, exactly. You don't want to jump in front of a moving train. That's what jumping in front
That's
of.
literally what's happening here. Yes.
Yes, it's a moving train. You are not
Yes.
going to short this perfectly. Like, yes, you could try a million times. You could short it 3 weeks ago. You could short it 4 months ago. You could try at this thing a million times, but you would have made a lot more money just continuing to be long the trend. For me, that's what I do. I'm going to stay long this trend. When it bends, we'll exit. When we start to see the miners slow down compared to gold, we'll exit. When we start to see silver slow down, we'll exit. We're not seeing any of that. So we want to stay long.
Totally. We have a question here in the chat, Jason. How much of your portfolio do you allocate to precious metals? For me personally, I'm like 30% precious metals. So I'm not all in on precious metals. There's a lot of other things working, and I don't think there is a right answer to that question. But Jason, I know you're a very systematic investor, so you might have a more nuanced answer than myself, perhaps.
Yeah, for me, the trades compound together. So if we're looking at something like gold miners, we're going, okay, I'm starting out. This is going to be, let's say, 5% of my portfolio, and it doubles, then it doubles. I don't shave it down back to 5%. But all of the positions in there in the long-term portfolio between the miners, gold, silver, platinum, palladium, I'm probably closer to 40% at the moment, which is very large for me. But it's because there's so many different things to trade, whether we're looking at the ETFs, whether I'm looking at, palladium, platinum, the size of the contracts, the volatility inside of it. I mean, it's gotten pretty crazy. So as these things continue, though, the thing I don't do as a trader is I don't shave these gains, meaning to take down the size because of the volatility. This is called vol targeting for trend following traders. If these trades continue and I start at a 10% allocation and it turns into a 30% allocation, I will let that be a 30% allocation. I do not just tear it back down, because the whole idea of following a trend is letting that thing compound and continue to make money. So I say, like, let it run. What I do, though, is have a trailing stop ready to exit that position whenever the trend turns, and that's the best you can do. But you want
Totally.
to hang on to
It
these
sounds
things.
kind of like the S&P 500 to me, like
Yes.
people complain that the Magnificent Seven makes up significant, I don't know what the percentage is today. It's a big chunk of the S&P 500, and there's a lot of risk in that. So does that mean, like, when it gets as it grows in your portfolio, are you like shortening your stops to kind of contain some of that concentration risk, or no?
I do not. So I continue to let that thing run. I don't tighten stops as they go. Like for example, if you have a 20% stop on, GDX, let's say, what do I really care if I've let that position compound for an entire year and then it comes back 20%? It hits 150% and goes back to 100 or goes back 20%. I make 130%. Still very happy with that. One thing you gotta do as a trader is really let go of that idea of like catching tops, like or catching bottoms. Once you let go of that idea, you can make a lot of money. But the second you try to start catching tops, like, oh, this is overbought here, this is doing this here, at some point somebody will be right. It will turn over. However, comma, it's not happening today. And so continue to stay long.
Totally, yeah. The whole catching tops and bottoms, that's a big ego thing.
Mhm.
And as traders, we need to remove our ego from the equation and just quit trying to do that. It's not helpful for making money.
Don't
Uh,
catch bottoms in the market, catch Brazilian bottoms out there in the real world too.
yeah, yeah,
You heard it
slick
here
there.
first.
I like that. All right. So, we just talked about gold, but it's not just gold that's going up. It's the entire precious metals commodity complex. In fact, gold isn't even the best performer in 2025. Look at platinum, palladium, and silver on top of gold this year. Not many people are talking about that, Jason.
I was laughing because I brought this up today because I was like, Palladium has just been the, the most interesting thing, and it looks very similar to Platinum now, where it's like Palladium was kind of sitting there, everybody was going, well, this isn't going to move. It's not a real precious metal, and those conversations started to happen again, and then finally it just said okay, and caught all the way back up to Platinum, which is wild to see. But that's how these cycles move. They're going to go through all of these different precious metals. They'll probably move into the rest of the metals complex as well, and possibly some other commodities. But I really like the idea of being long the top four at the moment. You want to be long the strongest stocks, the strongest commodities, whatever's the strongest in your sector or whatever you're trading. Like that's what you want to stay long. And I think now's still a good time to continue to hang on to your positions. Not saying, hey, go buy into this today, saying if you have positions, hang on to them. I know a lot of people on here mentioned that there's still 20 or 30% of their portfolios in precious metals. That's great. I'd say stay long. The relative strength is telling you where to go. Feeder cattle right behind that for all you cattle traders. There's probably like one out there that's actually trading cattle in the chat. But that's been a great trade as well. Loving the way these commodities are kind of working at the moment.
Totally, yeah. And we talk about a lot about the precious metals performance in absolute terms, but that's not the complete picture. Like we're seeing relative outperformance versus the S&P. We could do this in a bunch of different ways, but pick your denominator. Gold is outperforming it, and it's doing it in a big way. Like, look at this massive base gold has carved out versus the S&P 500. Like, this is a chart formation that we buy all the time. Like, this is what leads to new multi-year uptrends. So, people tell me this gold rally can't go much further. And maybe that's true in absolute terms. Maybe gold quits going up in absolute terms and, maybe stocks go down and then this ratio goes up. Like that is a scenario that could happen. It doesn't need to be gold continuing to go up. But, I think the bottom line is that the relative strength is in the precious metals. So it'll go down less during bad times and it'll go up more during good times. That's what relative strength is.
Yes, absolutely. And this chart, I kept talking about it when we had that pullback earlier this year in gold, and it wasn't even a pullback really in gold. Gold just went sideways, and everybody was like, "It's the end of the rally." But Sam and I kept noticing, silver was starting to perk up. We're noticing that the miners are starting to perk up, and we were saying like gold will probably continue to move higher. And this chart, even though it was like it pulled back a little bit, I wanted to compare it to that time back in the early 2000s where we saw that pullback and then it led to a much stronger uptrend in gold going forward. I think that could be the possibility here. It could just mean that the S&P is just going up at a lower rate than gold. That's possible. It could also mean that gold just continues to rip for a little while longer. It's going to consolidate. It's going to pull back. It's going to be messy, but it seems to me like the trend is up and you want to stay long.
Totally, yeah. Our targets are still higher for gold. Our premium members of Gold Rush know what those targets are. We're not going to cover them here, but yeah, I see no reason for gold to quit going up here, despite the extreme momentum readings we covered earlier. And then this is another relative chart that you brought along, Jason. So in the top pane, you have gold futures uh, going parabolic, and then you have the volatility squeeze uh, indicator of the ratio in the middle, which is gold miners relative to the underlying rock. So gold stocks versus gold the rock. And this doesn't really look like a downtrend to me, Jason. This looks like a bearish to bullish reversal pattern over a very long time frame. So like we mentioned with this chart here, the gold versus the S&P 500, this is probably going to go up for a few years at the very least. It could last even longer, up to a decade. I think that's the same story here with this ratio chart. The gold miners are likely to outperform gold for the foreseeable future.
Yeah, I agree, Sam. I think that's where the money's going to continue to be made. A lot of people are going to look at gold. I have a bunch of friends who are hitting me up. Hey, I want to buy some gold. Yeah, you'll be fine. Like over the long run, you want to hold on to something for 40 years, you'll probably be fine in gold. You want to make a lot of money though. You want to have like those 10x gains, those huge winners. Like you got to look at the mining space. And right now, it's the junkier the better. We keep talking about that, the idea that you want to get down the cap scale all the way to those exploration stocks that don't even have earnings. That's where you're going to want to be right now, and that's where the money's going to be made. I think this chart's just basically saying that the regime has changed from consolidation and boring, and we can't do anything with these gold mining stocks into now they're starting to rip. Now you want to be in them, and now you want to continue to hang on to these things as it's just starting to take off in comparison to gold.
Totally. And silver. How can we not talk about silver during this call? I mean, wow, what a move we've seen in silver. And you know what's driving that? It's not enough supply of silver in the market and an overwhelming amount of demand. That makes the line go up. And that's exactly what we're seeing in this chart that you brought along, Jason.
Yeah, traders are willing to, pay like, they're paying 30% premiums at the moment for silver, and that's pretty wild. So as we're seeing that, there's going to be a lot of problems with the ETFs. They're not going to be able to issue enough shares based on the amount of metal out there. People are taking a lot of deliveries right now. So we're seeing a ton of deliveries in silver from the futures market. LME is getting low on silver. They're having trouble even keeping up with any of these deliveries, because you have to think the ETFs like SLV and so on, they have to have a certain amount of silver underlying their assets. And they don't have it right now. They continue to try to find it. They're trying to get it any way they possibly can at the moment. So it's going to make physical premiums go up pretty high. I think that will probably continue, but the better news for us as traders is it will continue to probably bring the price a little bit higher from here, get us out of that $50 zone, possibly continue that trend. Yes, it can pull back at any time, just like anything in the world. But I think the setup is here for this to go a lot higher quickly.
Totally, Jason. How I learned it in technical analysis kindergarten is the bigger the base, the higher in space. And it's one of the biggest bases in the entire market. And it's not stopping at that resistance line. It's breaking out to new all-time highs. So I think this chart's going to go really high in space. It doesn't need to be more complicated than that. Keep it at technical analysis kindergarten. Like it's really easy to overthink things sometimes, like, oh, silver's gone from 30 to 50 really fast. It better stop here. But like it's really easy to say something like that to yourself and then get talked out of this trade. But the fact of the matter is this is just now entering an uptrend after nearly 50 years of doing absolutely nothing. So zoom out on your charts, get some perspective on what's really happening here. And the reality of the situation is this is the beginning of a brand new uptrend. So it can keep going for much, much longer than most people expect. I think the first stop for silver is $73. That's the 161.8 extension of that 2011 to 2020 drawdown in silver futures. But I don't think silver is going to stop there, Jason. I think it's going to 100, maybe 150, probably higher than that. But, like we need to get to 73 first before we can get to 100. And we have to get to 100 before we can get to 150. So let's take it one step at a time.
No, I totally agree, and I think this thing's gonna it could get up to 100. I don't want to say 100 by year end, but I think 73 would be interesting. Did we say 73 by year end?
We were
Possibly.
talking about this
Yeah,
with
yeah,
our Gold Rush members earlier in the week.
yeah, yeah. I think
So
I think we agreed
earlier in the
73 is
year,
possible.
Jason made a bet that silver would hit 50 before the end of the year, and it happened before the end of October. So we raised the stakes. Jason said silver's going to 73 before the end of the year. So chime in on the chat if you think Jason will be right on that call or not, because if he's wrong, he owes me a beer.
I'm not buying anybody beers, Sam. If I can't drink beers, I'm not buying anybody a beer. That's one of my rules, only rule. But I will buy you anything else around that same price, absolutely. But I think it's very telling in the time we're in, like this massive base. We talked about the one in coffee that showed up not too long ago. See that massive base breakout, getting over those 1970 highs and continuing higher. I think silver is going to look pretty similar, where we start to carve out this new range. Silver's probably going to be above 50 at some point and just continue up there. There will be a pullback, guys. I would be ready for that at some point. After this big of a breakout, I think there will be a pullback. This thing will probably come back a little bit at some point, consolidate, and possibly move higher. But once again, that's all wishful thinking. When you say things like, I hope we get a pullback, I hope it consolidates, I hope this, that's all wishful thinking. This thing could just take straight up. It could go right to 73 without even looking back. This thing could go the other direction, but there's nothing telling me this thing's going to go down at the moment. So want to stay long. I think silver is still where you want to be. I think you want to hang on to those silver coins at the moment. I think also you want to get into these silver mining names. Anything with the name silver in it's just kind of going crazy right now. So continue to hang on to those trades, and you're making a lot of money.
Totally. And Bob makes a great point in the chat here that the silver gold ratio is still quite low. And yeah, it is. You're totally right about that. And like we mentioned at the top of the show, platinum, palladium, and silver have outperformed gold in 2025. And you can look at all of those ratios or all of those commodities relative to gold, platinum, palladium, and silver. Look at them relative to gold, and you'll see they're at quite depressed values. So yeah, they've been really hot in 2025, but when you put it in context, I think it has legs. I don't think it's gotten too extended or anything. I think this outperformance could last for many years.
No, I
And
agree.
so we've covered a lot of precious metals during the show, but I think we need to talk about the base and industrial metals, Jason. Not a lot of people are talking about this. Everybody's focused on the gold rally, and I totally get it. Like, yeah, gold has been awesome. It's extreme. It's a historic uptrend, one of the greatest of all time. Gold's been all around for a very long time, so that's saying something. Um, but man, metals and mining, copper miners, and steel producers, these three charts make up the base and industrial metals complex. And the XME and COPEX have broken out of massive bases that go back to the great financial crisis. And they're making new all-time highs. But steel producers are still coiling in a massive base, trying to break out and catch up to its peers. And I think it's going to happen very, very soon, Jason. I mean, man, what a coil you have here in the steel producers. We've been digging under the surface, looking at some of the steel the individual stock steel producers, and they've been working very well for us and our Gold Rush members. So, doing that bottoms up analysis can kind of help us get a better understanding for this top down analysis that we're doing here with this chart. What do you think about the steel producer trade, Jason?
Oh,
You
I
think
love
it'll
it.
get going soon?
I love it. And there was a question in the chat about copper miners and uranium, and if we're going to, if this, how this is moving with the AI trade. And I think these bids that are happening because of the AI trade are significant, but at the same time, I think it's a structural bull market in these sectors at the moment. So I continue to say like, hey, just take them as they come. Energy is not moving yet. We don't need to do much there. Got copper miners, they're moving. Buy some. We got steel producers, they're starting. Buy them. That's how you want to think of the cycle. Big picture, yes, I could make a huge thing. We could talk, I've written about the AI trade, commodities, and so on. But I think keeping it simple here, looking at the charts, finding the breakouts, and continuing to just take the next trade. That's how you're going to make the most money.
Totally, Jason. And there's major catch-up potential here. I like looking at this chart of copper miners with gold miners, and gold miners have been absolutely ripping up well over 100% in 2025. And copper miners have been ripping too, but when you zoom out to that 2011 peak, the GDX is well above that, while the copper miners are just now breaking out above that level. So I think there's a major catch-up potential here, and that should bode well for the entire space. Metals and mining, steel producers, you know, talk about the aluminum stocks, go on down the list with the base and industrial metals. I think there's major catch-up potential there. Now, Jason, let's finish the show with some more macro talk. So we just have a few charts left before we wrap this up, but you brought along this chart of the US dollar index with the yield curve, and man, the dollar is getting the crap kicked out of it, Jason. So does that mean this yield curve is going to continue climbing out of this deep inversion?
That's what I think, Sam. As I'm looking at this, I think like we're in a very strong. The odds are very strong that the commodity super cycle will just continue. We've seen it in all these different sectors, from gold, silver to palladium, platinum. Now we're moving. Then we moved into copper, metals and mining. Now we're seeing the steel producers start to make a move. I mean, we're lithium, uranium. I could go on. There's a bunch of them. Coal stocks are starting to move. No, that's another one. So I think that, this is going to just continue higher here. The yield curve is what I'm talking about. The dollar's probably going to continue lower. And I think it's just saying that as plain as day. We don't have the right environment for the dollar to really catch a bid here. It will bounce. There will be mispositioning, especially if you're looking at the futures markets, the COT reports. They'll be caught up for they're not out as the government is shut down, but we'll catch up with those and the past reports whenever the government decides that they're going to be back and working again.
Totally. And if you're out there listening to this, go ahead and just call the government, tell them to open back up and give us this data, because I want this COT data. I think there's a lot of interesting things happening. Like, I think the palladium COT is one of the most interesting out there. So, like, in recent years, the commercial hedgers have had their biggest net long position ever in the palladium futures. And historically, when they flip from net long to net short, that's when you get the best rallies in palladium. So I'm really watching that market closely to see if that COT has flipped net short for the commercial hedgers, just to confirm this rally that we're seeing in palladium.
Sam's been watching this for so long; it's probably like heartbreaking to see the government shut down as the
It's so
palladium
sad.
prices moving. That's
Yes.
funny. But no, I
Hopefully
mean,
it comes out soon, though.
you guys can also call them and tell them to just stay shut down and maybe make it a private thing, and maybe we can get the data a little bit
Yeah,
better.
I
But
would be cool with that too. Yeah.
just whatever you guys feel like, whatever side of the fence you land on, go ahead, do it, please. But yeah, I still think the dollar's probably headed lower here. I think the cycle is set up for gold, the rest of the commodities complex to continue higher. We highlighted for members earlier this week about the fact that, gold and oil, most of the time they do go up together, maybe not as much as each other, but most of the time they do kind of move together at certain times. At the moment, this is one of the rare times we're seeing this insane outperformance in gold compared to oil. That will probably change at some point too. Not ready to buy oil yet, but just keeping that on my radar. But yeah, crude oil, continues to
Yeah,
break
I mean,
down.
how
We
can
need
you
to stay away
possibly
from
buy
it.
this chart, Jason?
We need to stay away
This,
from it at the moment, man. I mean,
yeah,
I think that's the thing that everybody continues to talk about is that they want the trade. Like it's like when you want a trade to work, that's the trades that like never work. You want a trade, you're going to put it on because you think it's going to happen. Then it's just going to chop around and basically tell you why you were wrong. This is one of those. I do think it's going to happen, but like we say every single week, got to be patient. This isn't a trade where you're just going to put it on and make all the money in the world tomorrow. It's a trade you got to wait, get crude oil above $80, get XLE above 101, buy the heck out of it. But for now, you're just chopping around. No reason to do anything.
totally, Jason. Well said. And that concludes our show today. Thank you, everybody, for being here for Gold Rush Live. If you liked what we had to say, you can click the link in the description to learn more about All Star Charts, Gold Rush, and what we're doing. But just simply, we're covering everything in fixed income, commodities, and currencies, and that includes a weekly precious metals note, a commodities note, currencies, and bonds. Of course, Jason, you do the bonds. You do a great job covering fixed income. You make bonds sexy again, Jason. You
Bonds
do
are
so.
sexy.
I love
We're
it.
gonna make him sexy here, if nowhere else, because it is such an important thing to understand if you want to understand the broad market. People are always asking me questions like, "What do you think about how are bonds going to affect the broad market? How's the dollar going to affect gold and so on?" Like that's what we do here a lot. I try to put that stuff together about every week, and then we can get more information on all that. And then we cover all the sectors. It's not we call it the gold rush, but we're not just covering gold. We're covering energy, metals. We're covering obviously the steel producers, lithium miners, uranium miners, any miner basically we cover as well. So please
We just try to
definitely
make the
join us.
most amount of money in
Yes,
the commodity space. It doesn't
yes,
matter if it's cocoa that's working or it's crude oil or uranium.
yep,
Like we're flexible. We'll trade anything.
yep. We're trying to make money and we're trying to enrich your portfolios, and that's what we like to do here.
Totally. So click the link in the description if you want to learn more about All Star Charts Gold Rush. It's $12.99 a year. And if you don't like it after 30 days, you can get your money back. No questions asked. But we have a feeling you'll stick around because a lot of our members are very happy and they continue to stick around with us because we're crushing it, Jason. So thank you guys for being here today. Shout out Mr. Zerby, regular around here. I really appreciate you being here again, Mr. Zerby. Mark, we've got Bob and Justin, Risky, Wavy McFly. All the regulars are here, Jason. Shout out all of you for being here and making this a great show for everyone. We really appreciate it. We'll be here same time, same place next Thursday for another great episode of Gold Rush Live. But until then, stay safe out there, everyone, and go try to make some money.
Later, guys.